So when you turn up to a market, you're trying to assess exactly what is likely to be going on. Now, I say that, but very often what you do is you approach a market, you sort of say, well, this is what I think is going to happen, and then you look for those particular signs within the market, and then you jump on that opportunity. However, some markets throw up some real big, clear-cut opportunities. They don't occur that often, but when they do occur, it's useful to be ready to take advantage of it. And the reason for doing this video is that very often you'll see these at large race meetings when there's a lot of money within the market and it's trying to do something. And when you see this situation occur, it's fairly obvious what is actually going on, but probably what is less obvious is how you should trade it. So that's exactly what we're going to do in this video. So when you're actively trading, what you're typically doing is you're looking for a particular setup. You know, the price has been over here and it's coming down to here, and you're sort of thinking, well, is that going to continue or is it going to head out in the other direction? So you're looking for clues around that point as to what is likely to happen. A lot of trading can be a little bit ambiguous because you're sort of saying, well, this is what I expect to see, this is what I think will happen, and this is what I'm going to do about it. And then you have to sit and wait for that to happen. But sometimes you don't get a very clear signal as to whether that is going to happen. That's what catches a lot of people out when they're actively trading. However, sometimes the trade is completely obvious and you know exactly what to do, when and why. So in this video, I want to show you a trade that occurs. It doesn't occur particularly frequently, but it does tend to be clustered around larger races or race meetings. And when you see this situation develop, then it's very worthwhile getting involved. And it's important to understand exactly what you're trying to do. So in this particular example, what we're actually looking at is somebody that is actively trying to lay in the market. And as a consequence, your trade is to try and get in front of that lay and trade it as they begin to move their position up the ladder and try and get filled. They're going into the market with a large lay order. They want to get that lay order filled, and you're going to take advantage of that. So we're looking here at an interesting market. And what I'm going to do is I'm going to stop the video immediately and we're going to go to a still so I can describe what you are looking at within this market. So these markets don't happen all of the time, they're pretty rare, but you see me getting excited about them when they do occur because it gives you a very strong indication as to where price activity is going to go. And I can describe to you what we can see in the market at this particular moment in time with this still, but basically there's been a lot of money traded at 188, and what happened in this market is that there was a large order went through the market and took out a disproportionate amount of money at 187, 188. That order stuck around in the market for a short period of time, and that order has now been moved up to 191, and you can see that there's been a reasonable amount of money matched at that particular price within the market. So basically, big order in the market, it's taken out a lot of money at 188, and then it returned, you know, a few seconds later at a slightly higher level. So this order is an order that somebody wants to get filled. They want to lay the favourite in this particular race. It's a big order, and they're going to try and get rid of most of that money on the favourite. We don't know why they've done this, or their rationale behind it, or how much money there is in particular on this particular account, but all that we can see is that they're actively trying to get that order filled, and that is the basis on which we're going to trade this market. So we'll continue the video now, and you can see that we start putting orders in above this particular order. That is because we're expecting the price to move. That 23,000 that's sat at 191, we can see that it's caused the price to move out and consistently move, and we're expecting it to move again. So we're keeping an eye at that, and can you see the money at 191 has disappeared? You can see that the volume rose at 191 and 192, but that could be somebody self-matching. He may have just taken out the position on the other side, or it could be somebody that has actually taken that. But because the price has been moved already once from 188 to 192, we are expecting it to return. You can see we'll make a loss if it heads all the way back down to 188, but we're just going to sit here, and there it is, 197. So now that we know that this person is trying to get a low order filled, we're just going to pop a few orders in front of it, and you can see it's disappeared again. We're adding to our position at this moment in time. We'll make a loss if it reaches 1.9. And all we can do is sit and wait. And you can see I'm starting to look a little, and there it goes again, 202. So you can see it's gradually reducing as the order gets replaced into the market. So this indicates that the person is getting filled somewhat, but we're right at a crossover point within the market here. So I'm beginning to wonder, and we're right at the top end of the trading range, whether in fact it's just going to stick here. So the person could be saying, well, I'm willing to take a price at evens, but I'm not willing to go any further. So that's why I've started to exit the position a little bit within here. And you can see the money's gone again. And there's the price and the spike in the volume that saw this activity within the market. So is he going to return? Is he not going to return? What I'm doing is reducing my risk in the trade at this moment in time, because we're at that critical point within the market and we're right at the top end of the trading range. So I'm just having a look to see where my potential loss is, down there at 1.8, and there he goes again, 206 this time. So all of a sudden you realize that in fact this could be going a little bit higher, because if this order doesn't get filled at 206, then maybe it will get pulled and moved a little bit further up. There's not much money on the other side, so you can see there's money here at 2.1, and there's little bits. There's a big chunk of money at 2.2, a little bit further up, but it's not getting filled very quickly. So we have to strike this balance here between trying to get a bigger trade into the market, or trying to just make sure that we don't get caught out if the price starts to head back in the other direction. Because can you imagine if that 25,000 vanishes and starts plummeting back in? We don't want to lose all of our profit. So, we made a decent amount of money, and there was a little bit more taken there. Can you see there's 27,000 at 208? But we'll just feed back in a few orders and make sure that we've actually got a profit within this market. And it's been a relatively sort of shallow move, but can you see how that money is stopping the price from going back down? There's just so much for the amount of liquidity in this market, and you can see that our potential for a loss now is down at 169, which is miles away from where we want to be. So we can actually take a little bit more risk if we want to feel comfortable here. So just recentering the ladder, and we're just sat here waiting to see if that money at 206 gets taken. And that's all we're doing here. We're just sat here. We're comfortably in the position where we've got a decent amount of profit. We're just waiting to see if the price breaks a little bit further from here in either direction. We want to try and hold on to as much profit as possible. We want to make sure that we don't take too much risk. And can you see the money's gone again? So you can see I'm beginning to close a few at 206 here. We can't see that the price has come back into and there it is again. So there you can see that the price has really begun to accelerate. We were almost out of our position anyway, but he's come back and tried to get filled again. But you can see that the amount of money that's getting matched now is a little bit thinner. We're getting a little bit closer to the off, so we're just going to be a little bit more cautious within here. But if you look at the graph, you can see what happened. You can see the two volume spikes in there where the big orders came. He's come back in at 2.2, so perhaps we got out a little bit too early. But nonetheless, you can see for a very short period of time here, we've made £331 fully hedged, and it took next to no time at all, and it was on the basis that somebody was trying to get a lay order filled in the market. Very simple trade, but very effective, especially when you see a large amount in the market like that. So I hope that video has been useful for you. It doesn't happen that often, so you need to be alert to that, and you're looking up and down the ladder for any very large outsized amount. And when you first see it, you're trying to judge exactly what it's going to do. So I would say that the first time you see it, you probably don't do anything. You're waiting to see if the order starts to get filled and then gets moved. And when it gets moved, you'll know which side of the trade you need to be on. But anyhow, I hope that video has been useful for you.